So, when we think about the relationship there, as long as these companies continue to deliver on earnings, we're not terribly concerned about their share in the index or what valuations look like. When we think about this from both a short-term and a long-term perspective, in the short run, obviously, there's a bit of a tailwind for the big growers, given the state of the world and people doing more from home, more through e-commerce channels, so on and so forth. And then when we think about this longer term, I'm firmly of the view that when we do get to the other side of COVID-19, the world is going to look very much like it did coming into this downturn, which is a world of mediocre economic growth and an investment universe where investors are willing to pay a premium for companies that can grow against that lackluster macroeconomic backdrop. And so I do think that there's some staying power here. I mean, there will be bad days for all of these names, but short term and long term, we think that they're fairly well supported. Again, as long as the earnings continue to come through.
Oh, absolutely, David. The other key factor to note is the dollar's weakness and how that can spark off a revival in earnings for some of the export-oriented names on the S&P 500. Because remember, 45% of the S&P 500 revenues come in from the international markets. And so what do you expect on that front going into Q3?
So we do think that the dollar could weaken a bit here. I think that seeing the rest of the world deal with COVID far better than has been the case in the United States could certainly lead to some dollar weakness and strengthen currencies like the euro and so on and so forth. And so not only does that support the more export-oriented names, but it also frankly supports the big growth names that we were just talking about. A very large share of the technology sector's revenue comes from abroad, and a weaker dollar is an inherent tailwind for that. And so when we think about the setup here, you have expectations for earnings season that are very low. You have a dollar that is weakening. And you have a global economy which is gradually coming back online, and the U.S. is in fact lagging. And so I wouldn't be surprised here to see a little bit more of a cyclical trade begin to materialize in the short run as we figure out exactly what the direction of travel for the economy is. I think that there's a nice setup for a pop in some of those names that you mentioned earlier that have lagged the broader rally in markets since the middle of March.